Hey guys, Hitori here. Welcome to the 27th episode of the Weekly Market Outlook with TradingSprop. Now, in this episode, I'll be covering the DXY, gold, the S&P 500, WTI crude oil, Bitcoin, and pound against the yen. Now, if you have any other asset classes you would like me to cover, just leave a comment down below, or even better, join our free Discord to talk to me as well as the TradingSprop team. Alright, so let's just get straight into the outlook. Here we have the DXY daily. Okay, now just a bit on the fundamentals is that, as of now, with the way things are, midterm for me at least, I think I might be bearish on the dollar. And here's why. The reason is that, last week for the NFP, we did see a big miss on the jobs report. We saw only 12,000 jobs being created, which was way lower than the forecasted of around 100k jobs, but way lower than the previous month's 223,000 jobs added. Now, this slowdown, it may be because of the recent huge hurricane that we saw in Florida, as well as strikes regarding the election. But regardless, this was supposed to negatively impact the dollar quite a lot, because the dollar thrives off of, good and strong economic indicators, and NFP is kind of one of them. But despite that, the dollar index kind of fell a bit during last week's NFP and then immediately recovered. We saw stocks increase as well, so indices also increased and interest rates also rose. But I think the main reason we're seeing this is because that even though job growth was very weak, the key factor is that the unemployment rate actually held steady at 4.1%, which is generally good news, I think, which is also why we saw the market give the reaction that it did. All right, but with this in mind, we now know that the unemployment rate has stayed stable, which adds to the view by investors that the Fed may continue on to lower and continue cutting rates later this year. Right, we also had GDP data coming in weak, as well as the manufacturing report showing that actually the economy might be shrinking more than expected. Okay, but regardless, next week we do have a big event, so these views are likely going to change. We do have the elections coming out next week, and I think regardless of who wins and who you want to win, or regardless who you want to win, I think that both parties are going to, or at least have shown intention to increase government spending. So we will see how that impacts the markets. I'm not sure as how the markets will digest it, but I think moving into this event, it's more likely that the markets will just say, you know what, we are being a bit steady and uncertain before the elections, and once the results come out, the markets might digest that, and then we are likely, good to go. So let's kind of push that away and let's look at a bit of the technical side of things, because short term, even though I am bearish, I don't want to kind of have this solid view until the elections come out. So here we actually have the DXY daily, and let's look at where we currently are with the current price. So this is where we are, and above price action we are just at this support right here. Right, we had this resistance broken up, become support, and we're finding support right here, and we are trapped. Right, we're trapped within this 800 tick range right here. So to be fair, on the daily it's not much, but on your intraday time frames it's still alright. Okay, so having expectations that the Fed will continue cutting rates, and we want to kind of expect more of a bearish sentiment on the dollar, seeing as GDP reports also aren't showing strength. That means in general weakness for the dollar, but technicals are still showing that we're finding support. So until we break beneath this 103.46 price point, I don't want to say that we are bearish. I think that if we keep holding this level, we could be continuing going up back into the retest these highs at around 104.63, and if we do break above 104.68, we could be continuing to go higher into this range at 105.184, which is around a 500 tick move back into this previous area of structure right here. But until then, I'm pretty much just going to be staying on the sidelines until the election results have come out for USD denominated pairings, right? So just a bit of some information on there. That's personally what I would like to do, since I'm a bit more risk adverse than some other traders and investors. Okay, so if we do break beneath 103.46, I do expect the market starting to thread down lower. Some might call this a pullback, but it might just be weakness in the short term. We don't really know. Back into 103.047 or 102 right here. We could see reactions around either of these price points to continue higher if that's the case. But if we violate any of these retests right here, so for example we come down, we come up, and then we're respecting any sign of resistance, we might be seeing this bearish trend take into action right now, following the bearish expectations in terms of fundamentals. Okay, so that's pretty much it for the DXY as of now. There's not much to cover until we either break beneath this level to continue lower, or if we break above into the short range, and then we could see some reactions around 105. But breaking above 105, we could see price come up all the way into perhaps even 106 right here. But that leaves to be told. Best to just wait for the elections upcoming next week. And if we actually do pull out the econ calendar right here, next week we actually do have a few releases, not just the election, but also unemployment claims, as well as the federal funds rate. Okay, so a big week next week, not just the elections, but also many other high impact news releases. So do wait until the results come out. If you are willing to take the risk, you could also just trade normally. I know a lot of people here are just purely technical traders, and that's totally fine. I totally believe that you could make a killing off of just technicals, but always manage your risk. Don't put yourself into scenarios that you don't want to be a part in. Okay, play within predictable scenarios. Even if you're just trading technical patterns or trading technical concepts, don't forget that in the long run, it is best to at least be aware of some of these sentiment and fundamental news releases, because that is what's going to drive the markets in the long run. Okay, so that is pretty much it for the DXY. Let's look at the next pair, which is gold. So gold is still at all-time highs right now, and with the conflict in the Middle East, as well as just global tensions overall, people are willing to actually pay a bit extra or a premium for gold because exactly of this uncertainty. And seeing how elections are coming out, things could continue higher until the end of this year, possibly even into next year. Analysts do predict that we could go all the way up into 3,000 for gold. So that is a crazy amount to see. In the meantime, the Fed, the consensus I think right now is for the Fed to cut rates, so that would also support the notion for gold coming higher. Okay, so as of now, sentiment weekly and also based on fundamentals, there's nothing that should be shouting out into your face that we're going to be bearish on gold. So for now, probably still understand that any of these pullbacks based on where we currently are to just be, you know, well, pullbacks. Okay, any dips to be pullbacks. All right, so let's look at gold in terms of the technical perspective. We are currently here at around 2736. Above us, we have this newly formed structure of resistance, and right beneath it, we have this area of support at around 2715. So this is around a whopping 700 pip range, which is also 7,000 ticks. All right, so definitely a big range that you could play off if you're more of a short-term, you know, intra-week or even intra-day trader. This is definitely a range that you could play within. But if you are more of a swing or, you know, position type trader, I would say that if we do break above 2787, we can continue seeing price go all the way up into 28 right here. Okay, and also just increasing in around $10 increments as we go higher. That's where you should be looking to maybe partial out of your positions and, you know, take your profits whenever possible, because with the tensions around the election, we could definitely see that demand and that push to formulate that momentum in seeing higher gold prices, you know. But if we do break beneath 2715, we do have a lot of clean traffic and clean candlesticks right here to correct all the way down into around 2647 right here for around, you know, 700 points as well right here. So definitely shorts are looking clean, even though they may not make sense and may not be the best to look at based on the fundamentals. But hey, you know, sometimes the technicals may not reflect what your fundamentals are looking to happen. All right, so coming back into this, this is a big range to play in. This is also a pretty solid range to play in. Whichever happens, you know, we could come down here from support and then trade within the range, break above it. We could see price go up to 2.8k and within $10 increments just go higher and higher. Break beneath this level, we can see price transfers lower into this minor structure right around 2647, but ultimately around this major structure around 2607 right here. All right, so that's pretty much it for gold. Let's look at the next pair, which is the SPX 500 on the ON price feed. So last week I noted that we are trading within the support, and if we broke beneath it, we could see price come all the way down into this structure point at around 5702, and we are actually finding some support closing bullish around this price point, even though it is not a very convincing bullish candle with just the body and wick ratio. You know, some investors might prefer to actually sit on the sidelines now that the market is acting kind of in unpredictable territory. But just looking at something else, you know, if we are seeing a bearish dollar, we should in theory be seeing the money flow from low risk assets back into this high risk assets like, you know, gold, definitely S&P 500, Nasdaq and Dow. You know, more so these stocks are going to see an increase in volume as well as price movement. So I'm still bullish on the S&P 500. So this support forming, although it isn't a great daily candle, you know, it is still a support nonetheless. And if we could see price continue to go higher, taking out and retesting this high at around 5779 and possibly coming into this structure point right here at around 5852. But for cleaner buys that you could hold, I'd say a break above the all-time highs right here at 5877 is definitely a good call to continue seeking higher prices, although an entry down here maybe on the 4-hour or the 1-hour is definitely good to go as well. A dip and a closure beneath 5.7k, which is a psychological number. If we do see this break beneath this, clearing out all these wicks, we could see price come all the way down into this area of structure around 5.673, and a break beneath that, we have really clean traffic all the way down into potentially 5.393. But at that point, we might already be making a new range, so we might have actually shifted bearish in the short run. Okay, we do have this long wick here to be afraid of. Maybe it's something within here on the 4-hour and below, so make sure you look into that as well. But just off the daily in itself, this is still the cleanest area of support to my eyes as of now. Okay, so that's for the S&P 500. Let's look at the next one, which is WTI crude oil. So we actually had this level right here. Let me put that into orange. That's where we currently are. And last week I noted that if we broke beneath this level with conviction, we could come down to retest this low right here at around $66 per barrel. But seeing this candle fail to close beneath the previous candle, it kind of showed to me that we are lacking intention to actually come down to retest this wick right here. And immediately after that, we formed a swing point and then we just rallied higher. So now we are within this new range, actually this previous resistance at around $71, as well as this support at around $67 right here. So it's around a 4,000 tick range of around $4. So definitely still a sizable range that you can play from. But something that has always seemed to happen is that before elections, you could see the price of crude oil start to continue down lower, because that's what kind of a strong selling point for the current party in its favor. It's not to say that it's faked or it's manipulated, but it's just an interesting occurrence, we'll call it that. Okay, and we are also seeing this here as well. We've been seeing this large and massive dump, making swing structures lower all the way back in April of this year. So definitely a steady trend line, if you want to call it that, right here. But based on where we currently are, for crude oil, it's a bit sketchy, because we could definitely see support from a weaker dollar if the Fed cuts rate. But medium to long term, I think persistent high gold prices as well as a high VIX, it could indicate that we are going to be seeing higher risk aversion, keeping oil prices volatile. So quite frankly, anything could happen, but still the same thing. I'm gonna wait until the ball is dropped on the election results. So within this range, definitely some trades you could take, right? Coming to the top of the range, you could start to see shorts, down into maybe the midpoint of the range. Same thing, come to the support. If you find support here, definitely you could see price continue higher back into the range in itself. We do have clean candles here as of now, but the better part will probably be if we do break above this previous structure at around $71. You could see a retest of the wick here at $72, and break above that, we could see price go all the way to fill in this gap at around 74 and $75 as well, which is quite a size away, which is like around 2,000 ticks. A break beneath this level, now I'm definitely going to be seeing price retest this structure here at around $66 right here. So it's not that big of a range, to be fair. It's not looking too clean. It's just only 1,000 ticks, but definitely look left, you will have this really long wick at around $63 right here. So definitely wait for this to break. You can see price clear off these wicks, retest this level. That would be great. Okay, so yeah, until this range breaks, I can't really say anything. Okay, okay, so that was for crude oil. Moving to our next asset, which is Bitcoin US. Is it? I think I do some on Coinbase. Yeah. So here we have Bitcoin on Coinbase. The interesting part is that actually these highs, they don't exist on the futures contract, so it could just be some random liquidity grabbing or whatever. But anyway, let's just focus on the Coinbase data feed right here. So this is where we currently are, and last week we saw this large push up, and then we saw an immediate reversal lower, failing to close above the 73 mark and coming really close to retesting this wick right here. But we never saw that, and instead we saw price just dip horribly right down, and now we're actually closing beneath this support at $69. So if we do come back up and then we're showing rejection, we could see price come all the way back down to retest $66 at this structure point of this support right here. But if we do close above it and then we start to trade higher, this could just be a fake out, and then we're going to continue to be trading within the range, maybe up into even, you know, this $72 price point right here once again. Sorry, 72,000 price point right here. So it all depends on how we trade around this area, and if we do continue lower, we can expect some support around here, and a failure of this level, we could see price retest $65. And you know, if it goes lower, then definitely this structure point right here at around $62,000. I keep missing the 3 zeros, my bad. Yeah, but just waiting to see what price does, and these price points is really important. You know, we really just displaced higher above the 70k mark right here, just blasted through it, and then now we're coming back down. So you know, people could be seeing Bitcoin as a W if Trump wins. You know, if Trump wins, it's going to be a bullish sentiment for gold, for Bitcoin. So definitely I'm long on this, because many of the analysts reports, as well as a lot of the AIs like, you know, Polymarkets or Polygon, you know, they're showing that Trump is looking to be the victor in terms of forecast. But of course we won't know until it actually happens. But Trump has always been a big advocate for cryptocurrency, same thing with Elon Musk. So if Trump wins, then it's going to look like a big rally for the bulls is potentially coming for, you know, Bitcoin, you know. So definitely potential shorts into longs are favorable for Bitcoin if Trump wins. Okay, but regardless, I think as of now, I don't think I'll be bearish on Bitcoin or even crypto for that matter. Definitely looking for some more money to flow into this asset class right here, seeing as how uncertain a lot of things, you know, is happening. Okay, so that is Bitcoin. Let's move on to the final pair for today, which is pound yen. So this is where we currently are. Price action is right here. We just formed a new support at 196, and also we are trapped within this resistance at 199. So this is a 300 point range right here. Okay, so it's a 300 point range. We barely closed above this wick, so we did retest this wick right here and then immediately did a fake out to the downside. So here's the important thing. Last week I did say that if we do close beneath this level, we could see potential shorts to clear out these lows right here. You know, we do have a lot of lows being built up, and this for some SMC/ICT traders, this could be buy side liquidity. Either way, this is just really bad structure points right here. So we closed beneath this level, but we immediately closed back above it, meaning this could be a potential fake out. Next week, if we do see a closure beneath this level, we could see price definitely transfers lower to clear out all of these lows right here. You know, best case scenario is that we come down into this 190 major support right here, but it could really just stop at any of these levels, so I can't really be sure which one, and I'll just wait for some support to be formed, and we'll see if we can take longs back into any of these clean structures right here. But if we do push higher and then we break above 199, we could see price continue higher back into the 203 price point right here, which is around 400 points. Okay, so definitely an interesting one for pound yen. I was just waiting to see how we trade around these levels. If we start ranging just before the election, I probably won't be involved in any trades, but a break above or a break below will be my signal to take shorts or longs depending on how confidently we close, above or below these areas. Okay, so yep, that's pretty much it for this week's outlook. Big week next week. I'll just remind you guys once again, huge week. All right, so definitely a valid week to stay out of, if you are more risk adverse, but still tradable, of course. But manage your positions, especially coming into the releases of these elections and these high impact news releases. Okay, stay safe, and I'll see you guys next week. See ya.